Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 9th of October 2019, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, that we looked at yesterday, just to see how everything's getting along. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute an investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Also, just before we jump into the charts, quick mentioning of our JFD YouTube channel here, which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research page here, which you can also check out on a daily basis. And yep, I believe you can find a lot of useful stuff here. So yep, feel free to visit us here on jfdbank.com and click on the research tab, and yep, have a read through different material that we've got here. But right now, let's jump into the charts. Now, the first one I want to touch on here is the DAX. Now, I looked at DAX recently, and to be more specific, Monday. And what I was saying, guys, basically, we on Monday, what I was saying that we could see a bit of a curve here. We could see a move higher, a bit of correction to the upside, but if it struggles to push above its 200 EMA or gets held somewhere around there, we could see another round of selling here, which could potentially bring this index back down again. Now, for now, it seems to be working nicely. Of course, for us to get comfortable with the downside with further declines, ideally we would like to see a drop below this level right here. Even though I did mention that, like I said, I did talk about this scenario. This is the more, I would say, the more risky scenario, because in a way, if this was the support level here, I mean, if this was that little kind of higher low that it created, it might drift to the upside again. But again, that's why for now the main scenario is, of course, the fact that it got held here near the 200 EMA, slightly below it. It drifted lower, and it's according to the plan for now. But just to get more comfortable with the downside, ideally wait for a drop below the 11,880 zone. This way, the break here would confirm a forthcoming lower low, and we could target, excuse me, even lower levels. So, one of the levels for us could be around the 11,778.80 zone, or even we could go further down towards the 11,550 so area. So for now, keep your eyes on that. Let's see how this is going to play out. Again, we are more bearish than bullish on this one. But for us, let's say, to consider slightly higher levels, of course, well, for us to get positive in general, it would be a break above the 12,500 would be needed. But I do understand it's quite a big move to miss out here. So in a way, we'll start looking at some higher levels if we see a push above the 12,150 zone. So keep your eyes on that one. Jumping into a few pairs, AUDJPY. So I keep looking at this one. So I keep monitoring it. So after we had a nice drop here through the lower through this key area of support at 72.59. I've looked at this one previously, by the way, guys. So after we had a nice drop here, it drifted lower, found good support near the 71.71 zone, and from there kind of rebounded and pushed back to the upside. So again, it continues to trade below this downside resistance line taken from the high of this September 13th. So it's kind of still could be seen as a kind of bearish indication. But again, before we could examine further declines, ideally we would like to see a drop below the 71.71 zone, and only then aim for lower areas here. So there are some good potential targets underneath, but to be honest, we rather wait for a drop below the 71.71. This way the pair would confirm a forthcoming lower low, and we could target slightly lower areas. Initially, we'll aim for the 71.07, something like that, approximately around there. That's basically near the lows of the 29th of August and the 3rd of September. Of course, if that fails to withhold, then yep, further declines are possible, but this could be initially a nice, good, strong area of support, so we'll keep an eye on that one. But like I said, for now, we are just gonna continue observing this one, because for us, in terms of, let's say, the upside, ideally we would like to see a push above the 73.10, 11 zone, approximately around there, or even actually we could shift this a little bit here because let me just quickly adjust it. This is the level that we need. There we go, the 73.16, approximately around there, guys. So keep your eyes on that level. We'll keep an eye on it as well. So this is the area, a break of which would be needed in order to get slightly more comfortable with higher levels. I mean, don't get me wrong, a break of this downside line could kind of open the path here towards higher levels, and especially a push above the 200 EMA here on the 4-hour chart. But the reason why I'm saying that this level here, because in a way, if it travels higher, pushes above this downside line, but fails to move above the 73.16, 17 area here, then and then slides back down here, then this would be confirming a nice range here. So the pair could be stuck here for a while in this wide range. So that's why, guys, I do have this level here as preferred one for a further move higher. So a break of which is needed in order to kind of aim for higher levels. Keep your eyes on this one, guys. A very interesting pair, but wait for that confirmation break. USDCHF, now very interesting pair. Yesterday I talked about this one in my traders tea time, and basically we were breaking the lower bound of the rising channel, but this is exactly what I was saying yesterday to you in my traders tea time. Basically, we did have a drop below the lower side of the rising channel. It drifted lower, tested this key area of support at 0.99 level, but this is what I was saying. Even if we see a drop below this lower side, still this is the break that we need to see in order to kind of aim for lower levels. And basically, this is also what I was talking about. That looking at the daily chart, you will see a nice false breakout here below this lower side of the rising channel, and this is exactly what we had. So basically, we had a lot of sellers probably stopped out here, who were kind of already jumping in here and trying to kind of be ahead of the game. But as you can see, the pair quickly got back inside this rising channel, and now it's kind of sitting here. It's sitting today right now. It's sitting above its pivot, so it could be a good sign. The only thing is that for us to still consider higher levels or consider the upside again, ideally we would like to see a push above the 0.9964, 65 territory around here, and only then aim for higher levels. So keep your eyes on this one, guys. Quite an interesting pair. Keep your eyes on these two levels that I just mentioned, and let's see how this is going to play out. GBPNZD, also something that I've talked about yesterday, and basically, I was talking about this potential correction here, back up here towards the 200 EMA or this 1.94, 12, 13 territory. We managed to get exactly that, and it managed to travel higher, tested that area here, the 1.94, 13, and the area around the 200 EMA, and now it's sold off again. So in a way, how you could play this one out right now is, of course, keep an eye on the drop here, basically breakout point towards the 1.93 zones here zone. So if we see a drop below the 1.93, that could be opening the path towards much lower areas. We do have the 1.92 somewhere around here in the middle, but still the more important level for us would be around the 1.91 zone. So keep your eyes on that one. And like I said, for now, this is going to be our barrier, our important barrier for the downside, and we'll keep an eye on it because that's a break of that area could open the door towards lower levels, because this way the pair would confirm a forthcoming lower low, and yep, more sellers could be joining in. In terms of the upside, well, even if it travels back above the 200 EMA, still it's going to be below this downside resistance line, so we're going to remain neutral and just going to continue observing the price action. So even if it breaks the downside line, still we're not going to do anything here, because for us to get comfortable with the upside again, ideally we'd like to see a push above the 1.96 18 20 zone, approximately around there, and only then we'll aim for higher levels. So keep your eyes on this one. GBPUSD, quite an interesting one, and it's at a very key area of support. If we see a drop below the 1.2203, a Pro 5, something like that. So around there, basically, in a way, you could actually keep an eye just on the 1.22 zone. So if we see a drop below that, then this could be opening the path towards lower levels. We could aim for the 1.2137, and that level is around today's S2. So for now, guys, it's at a very interesting spot. In a way, if this gets broken, if the 1.22 zone gets broken and we see a further move lower, and ideally how you could play this one out today is if we see a close of a 4-hour candle below this, then there is a good chance we could see this one declining here further. But let's say if it breaks below, but let's say the 4-hour candle still struggles to close below this 1.22 zone, then probably remain careful, because this is I don't like ranges, but they happen very often. So that's what could happen here, guys, because if let's say this 1.22 zone holds, we could see a reversal here, and especially if it pushes back above the 1.22 74 75 zone here, then yep, it could be aiming for the 1.24 11 10 zone right here, which you can see that previously acted as a fantastic area of support, and then recently on the 3rd of October it acted as a good area of resistance. So in a way we could see another test here, but if this 1.24 11 zone holds, we could see another reversal here, a correction. So basically, in other words, we would be confirming a nice range here. So that's why I'm suggesting you to be very careful here today with this one. Yes, we did have a nice slide yesterday. But you can see that this 1.22 zone kind of held the rate from moving lower. But if we get that break, if we get that at least a close of a 4-hour candle, then we could consider further declines up until the 1.2137. We're only gonna target that area for now, because after that we're gonna just want to see what it wants to do after, because in a way it could reverse back to the upside here. So that's why we're gonna go step by step on this one. And like I said, for us, if we get a drop below the 1.22 zone, then we will aim for the 1.2137, and then we'll take it from there. Jumping into another very interesting pair. So as you can see, the pound was kind of the weaker one yesterday, and this is what I was talking about yesterday. So initially in my morning video, the pair was still around here, below this key barrier, the 0.8937 barrier, and below the 200 EMA on the 4-hour chart. But after that, the pair exploded nicely to the upside. We managed to get a nice push here higher. We managed to test the 0.90 level. That's great news. But then during the trader's tea time, I was looking at this one again, and it was basically sliding a little bit lower. So what I was saying, that in a way, if it corrects a little bit lower, but let's say struggles to move back below the 0.89 0.8937 zone, then we will continue aiming to the upside. At this point in time here, given the current formation, it would be a little bit difficult to, let's say that, oh, now the path is kind of holding to the upside. Yes, it has got more chances to move there, but to be honest, it's Euro GBP we're talking about. This pair tends to move sometimes in its own way, and that's why what we're going to do is just mainly purely monitor key potential breakout points. And for this one here today, probably the 0.90 level. That's what we're going to be looking at. A nice good push above that would confirm a forthcoming higher high, and we could aim for the 0.9015 zone. I do understand it's only about 15 pips higher, but it's kind of a key area of resistance here because previously it acted as a good support and also resistance back here on the 9th of September. So in a way, another additional break here kind of could do the trick for more buyers, and we could see this one drifting further north. We could then aim, and I'm excluding this little peak here. I'm excluding that. We could aim for, now this is slightly difficult to find a good level here, somewhere around here basically, the 0.9059, that could be our next potential target. But again, like I said, for now, probably be very careful with this pair. Wait for a push above the 0.90 zone, and then we'll take it from there, and then we'll aim for slightly higher levels. If this decides to drop back down and starts sliding below the this little intraday swing low of yesterday, and that's around the 0.8950 57, approximately around there. Yeah, 57, and then yep, we will aim for a little bit lower levels. We will aim for this key area of support, but if that fails to withhold, then yep, we could see a slide further down, and we could see a test of this short-term upside support line. Now, of course, the bear should not get too excited here because we still would be above this upside line, and that means that the bulls have still got a chance to jump in here and push this one back to the upside. But again, from the very short-term perspective, that's the kind of the game plan for the downside. So probably we'll wait for a drop below the 0.8937 and then aim for slightly lower levels. And the last pair, of course, is the euro dollar. So just to see how it's playing around here. And yesterday I talked about this one, and I kept talking about the same level here, the 1.0943. We had a nice perfect test of it, but you can see that the pair wasn't able to kind of close below it. So for now, we are keeping that level still here on the radar. If we get a drop below this, then yep, as it will work out. It could. So you shouldn't use the word will, but could work out that we could see this one sliding towards the 1.0904 territory around here, and then we'll take it from there. We'll see what he wants to do after. But again, this is the level to watch here. We're still keeping an eye on it. Yesterday, after failing to kind of move towards the 1.10 zone again, it drifted back to the downside, and like I said, tested this 1.0943. Maybe just slightly overshot it, but still, nevertheless, that's the kind of the important area to watch. If we see a drop below this, then yep, we will aim for further declines. If this suddenly rises back up here, to be honest, we're not touching this one right now, and until we're not looking at the upside until we get our break above this downside line. In addition to that, a push above the 200 EMA, and just for that extra confirmation, a push above the 1.1024. I do understand it's quite a big move here, quite a big territory to miss out, but to be honest, with this movement, it's we rather be safe than sorry. So, okay guys, I really hope that you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always at 13:15 GMT, we'll have a look at some of these instruments again. We'll have a look at some new ones just to see how everything's getting along. And yeah, as always, guys, I hope you have a fantastic trading day, guys. Be very careful, stay safe. Today, in terms of economic data, we don't have much apart from the JOLTS job openings from the US. And of course, we do have the we do have the crude oil inventories, so there's oh we do, oh sorry, we do have the FOMC meeting minutes, so how could I miss that one off? So keep your eyes on that one. That's coming out later today. So yep, guys, keep an eye on that one, and we might see a bit of movement later on. So let's see how that's gonna play out. Okay, guys. Thank you very much once again. I'll see you in my Trader's Tea time. Thank you very much, and bye bye.